You're welcome back. This is Business Morning on Channels Television. If you just joined us, you're watching Business Morning. And you can send in your tweets to @BizMorning. You can send in your questions to Johnson Chukwu, as it will try as much as possible to answer them. And we've been talking about the foreign exchange market in Nigeria. I'm sure we all know about the closure of the RDAS window by the Central Bank of Nigeria as one of the ways to curtail the fall in the value of the local currency. Thank you, Johnson, for still sticking around with us.
My pleasure.
Yeah, before we went on break, I said we will look at the issues of import duties and other port charges. We understand that this development could lead to an increase in that. Do you think that will be so?
Yeah, basically, it's you have a linear relationship between the amount of duty you pay and the FOB of the product you bring in. If you look at the FOB, you have to convert FOB at an exchange rate. And that exchange rate will now be maybe 199, maybe 200, as against the previous figure of 168. So the duty rate wouldn't have changed, but the duty rate will now be applied on a higher FOB. And that's why the duties have to increase. Generally, all the price of imported products will all increase because of the change in exchange rate. But the key thing is for those who are importing those products begin to look inwards. I have a friend who was a heavy importer of steel and ceramic tiles and other things. He has set up a massive factory in Ota. Massive factory, one of the biggest tile factories in the country. And he has wound down his import business. And he's happier because he said he does no longer have to contend with customs, immigration, and all sorts of agents at the seaports. So that's the direction the economy should be going.
Okay, the issue of foreign exchange exposure, some companies who have had to get credits from abroad, and then some companies, large-scale companies, get funds from abroad. How does these developments affect them?
Well, it will affect them negatively. I could recall in 2008 when we had a devaluation of the currency from 118 to 140 or 158. One of the companies that suffered gravely was Flamels. If you look at their published account in 2008, published account, they had to take a huge exchange loss, probably because they had an open position. And I think a couple of Nigerian companies were holding open positions before the devaluation. So they will take a loss, exchange rate loss. But that's a one-off. It will affect a couple of them negatively, those who are holding open position, including the oil trading companies, those who import refined products. And because they import those products on credit, I mean, they have credit lines they use to import those products. And some of them may have sold those products at an exchange rate at 168 or at lower prices. But now, when they want to negotiate those letters of credit, they have to buy funds at the new rate. So you're going to see losses here and there, which will also affect the exposure to the banks. Some of them that are not well capitalized may have challenges meeting their obligations to the banks. But I also think the banks have learned their lessons, and they would have, in a lot of instances, we saw a lot of them hedging against those things, which is why you saw a spike in demand for FX a couple of weeks back. Banks were trying to close those positions, including their customers' position that was also exposing them to their offshore lending partners. But these things are going to be like a phase. They are always one-off exchange losses. Companies that are well capitalized will weather through them. But that's the reality of the situation.
What about those that are not well capitalized? Those medium, small, we have micro, we have small, yes, we have medium companies. The large-scale companies can
yes, but you also know that the small scale enterprises don't normally carry foreign exchange open positions. They don't. And there's no bank that will allow a small or medium scale enterprise
to take on a very large scale.
So I don't think they're the ones that are exposed. Okay. The institutions that are exposed are the relatively big institutions that are credit worthy, that foreign suppliers are ready to grant them credit on their imports, or that have assessed foreign currency lines. And the only strong, at least B-rated institutions assess such credits.
Okay, I'd like us to take a look at the issue of non-performing loans. We all know the establishment of AMCON. It was meant to wipe off non-performing loans from the banking sector. Although some level of non-performing loans still exists, however, how do you think this issue in the Forex market may impact on the level of non-performing loans? Are we going to see an increase in that respect?
Yes, it's possible you may see an uptick. Like I said, companies that are not well capitalized, that are exposed to foreign exchange, that were exposed to foreign exchange positions, may not be able to meet the obligations to their bankers. And then you will see an uptick in non-performing loans. But I think, given the stringent credit risk policy of most banks, those incidents will be very few. And I think most banks would have only allowed institutions that have strong capital base to be exposed to foreign currency position. I also said that a lot of the banks were trying to cover those positions a couple of weeks back when they realized that the exchange rate was unstable. But when you mentioned that the AMCON was supposed to make non-performing loans to vanish, it's not possible. You know, in every economic decision, there's a risk of failure. And those failures could come from either endogenous factors, management mistakes, management weaknesses, or could come from exogenous factors. You have products that are no longer selling, you have competition that has overtaken you, you have economic policies like we're talking of devaluation of exchange rate. So you will always have incidents of non-performing loan. But the magnitude is what the banking system, the credit policies, and possibly AMCON. AMCON is actually an intervention agency, are supposed to try to keep low.
So going forward now, what do you think may likely happen in the market? Yes, this is just a phase. You talked about it being a phase. So every business owner should brace up for whatever challenges that may surface as a result of it. But what do you think may likely happen as we move towards the elections and afterwards? Although people had thought that the central bank may devalue the naira after the election, but it hadn't said anything like of such. Well, but what do you think will likely happen after now?
After the election?
Yes, as we move towards elections and after the elections.
Well, the election is already around around the corner. I think in terms of economic policies, economic decision makers are already pricing issues of election. Current exchange rate, current capital market prices have all factored in the elections, have priced in the issue of election there. What they may not have priced in, what is uncertain is the outcome of that election. If we have a smooth and successful election, you're going to have a rebound in the capital market, for instance. You're also going to have an improvement in exchange rates. And why do I say this? Is if you look at the situation now, you'll find out that the inflow of foreign portfolio investors' assets into the economy has dried up or has slowed down. If we have a smooth transition, a smooth election, you're going to see foreign portfolio investors, depending on which party wins, you're going to see foreign portfolio investors coming back to the market. Today, my feel of foreign portfolio investors is that they are naturally, which is actually natural with almost foreign portfolio investors, those outside the economy would be more comfortable with the status quo because they know the economic policies. So if you actually feel the pulse of business leaders within and outside the country, they tend to support the existing economic order because they believe that it gives them some level of certainty, because no decision maker wants to take a position in an uncertain environment. But if the reverse is the case, then you're going to see a wait-and-see attitude initially to determine the direction, economic policy direction of the government. And once that is defined, that will determine whether they want to come in, jump in, or wait further. But the key thing is that whether the election is going to take place on 28th of March has already been priced into whatever economic variables we're dealing with today.
Okay, thank you, Johnson. That will be all we'll take from you. Johnson Chukwu is the CEO at Cowry Assest Management Ltd, and he's been talking to us about the development in the foreign exchange market. Of course, the closure of the RDAS window of the central bank as one of the ways to help curtail the free fall of the naira. Just to let our viewers know that any moment from now, Channels Television will bring you a live coverage of the Show P scorecard presentation that will Shopee scorecard presentation that will be coming up any moment from now. And I'll be here on Business Morning. Thank you so much for watching. We do appreciate your time with us. We'll see you again tomorrow. I am Bolaji Akinwale.